is Martin from Secrets, the channel for learning about trading and investing. Welcome to daily stock market analysis show, where we look at what happened during the day in the markets and what we can learn from it and how we can plan for a better trade for the next day. Right? And this is for November 22nd. This analysis, technical analysis, will be for that, for tomorrow, Tuesday. Right? So we had a pullback today, a bearish day, especially on the Nifty. Markets pulled back to support, and the moment was slipped and is closed over in the short term. And we are having a consolidation, but is it consolidation a temporary one, or is it going to last for long? Let's get the charts and see what exactly happened. Nifty charts is what you see here. Here we have a bearish gap down. Banknifty charts here, we have a gap down, but managed to close green. Right? Managed to close above the previous candle's high, candle's low, basically. Right? Yes, so more or less flattish close on the Banknifty, but less than 1%, 1.81%, 148 points lost to the Nifty. So Banknifty still seems to be solid, and Bollinger Bands are showing that the consolidation has begun. A band has happened. Whether this band will be straightened tomorrow or not, we don't know, but as of now, it shows there is a possibility of a contraction on the Bollinger Bands. Here also the contraction, the bend of the Bollinger Bands have contracted or bent, and slowly maybe squeezing in. If that is what is for, it could again straighten out just like how it did earlier. Right? The thing is, it is a genuine polarity bounce, because the previous resistance zone is acting as a support now, and there is possibility that market could take a support at this gap 103.18.103 and then bounce up and make a new all-time high. This possibility is there. The Banknifty also, it has taken a support at a previous resistance zone from where it earlier a few days back bottom out. Now it is a support, and now there is a possibility of changing polarity. So that's a good thing about this. What else? It's flattish day on Banknifty and less than 1% of down, more bearish day on the Banknifty, and it closed less than PDL. Previous day low, Banknifty closed greater than PDL. That's the difference. Intraday it was kind of gap down of 1% of the Nifty, and then range bound within 50 points. Intraday Banknifty was gap down, but it managed to recover most of that. That's the difference. So actually, there also the price action also it's bullish. Moving average supports are there. 20 moving average support is also there for the Nifty. Right? All the moving average supports, moving average, the exponential moving average are acting as supports as of now. It has shown 2 weeks of breakout confirmation, but now there is a pullback that's happening. CIP bounce is possible. Bollinger Bands contraction we have seen. Support levels, small changes. 18,262 is the resistance upside, and then 18,458 after that. Downside 18,100, which is the gaps in the previous single and 20 DMA support. If that is breached, then you reach 17,966 support. So previous single. Banknifty 42,622 is the resistance upside. Is also Fibonacci extension 538 level, and 43,000 is the resistance after that. It's a rounding number. Downside support for the Banknifty is 42,200, and then 41,840, and then 41,644. That's also a gap. So 41,650 levels is a good support for the Banknifty, and 18,100 also is a good support for the Nifty. Momentum has slipped to the sideways one for the Nifty, but Banknifty maintains its momentum in the bullish zones here. Still, trend has crossed over the Nifty into the bear zones, but Banknifty it still maintains trend bullishness, right? And it's rising moment. Trend strength is rising, but in the Banknifty it's falling. So things are not great for the Nifty, but Banknifty still holds on with respect to the momentum, price action, Bollinger Bands, everything. Banknifty has got an edge over the Nifty. Index spiked slightly, but still close less than 15. So that's good. Which is why it was a short build up from both indices. Today's build up was that. Obviously, it was a red day. Options are showing that next monthly expiry, usually monthly expiries will be very volatile. And also, this expiry is the Thanksgiving holiday and US holidays and all that's coming. So, this volumes will be there. So, abnormal behaviors can be expected from with respect to monthly expiries are generally very, very volatile. Right? So as of now, it shows 18,000 and 18,300 is the range. Highest put and call rating seen there. 42,000 and 42,500 is where the highest put and call rating seen. The Bank Nifty for November 24th, 2022 monthly expiry. We have only 2 more days left for that, but the range seems to be very tight, very close. So no concerns from that. Put call ratio has more slide further down, far away from the bullishness. Some more away from the bullishness than 50.64, but look at this bullish momentum on the bullish put call ratio on the bank Nifty, right? So Bank Nifty stands apart from the options via data. The trend, the moment, and price action, all Bank Nifty is still bullish. Across the sectors, if you see today was 1%, half a percent to 1% down. All sectors fall. Metals are the only sector which is maintaining the bullish momentum as of now. All sectors are bullish, are bearish or sideways, either of that. Water and the pharma has fallen in the bearish on the short term, and rest of all the sectors in the sideways momentum. Heavyweights, all the heavyweights has fallen to 1 to 2%, except the ICICI Bank, which finally closed green, but it is flat green. HDFC still maintains the bullish momentum on the daily charts. Rest all have fallen to sideways momentum in the short term, right? So those are the things that you could keep in mind. Interestingly, Fyers has still sold 1,593 crores in cash market. So Fyers has turned to sellers. Last week they were net buyers. Last entire week, week to week basis, also both institutions were buyers. So they has compensated for that and bought 1,262 today. So that's okay. Institutions are still there. Crude oil has fallen, which is again good. Less than 80 it has fallen. Right, it is in the trend line channel, so anytime a good more, but it is 16,000 down more that has happened, which is good. Dollar index is rising, seen as of now. It had given a pullback, decent enough pullback happened, but it is again from rising up, and now it is 107.8, which is and climbed back in the moment of the sideways also. USD INR currency pair also is 81.8, 82 back to sideways zones, and which is not good. Global index also is shooting up and then not very far away from the multi-decade high, and USD INR rupee is also still going back to the weakest level, still maintaining the big level. So this is the concern. Currency is a concern. Gold has taken a up, 11% of up moves happened, but now it is falling from the resistance zone, and unable to hold on that. That's what is happening. But short-term momentum is still in the bull zones, right? So gold short-term maintains the bullishness as of now, but it's trying to consolidate and hold on the gains at 11% gain that they made. S6 is red as of now. US and is also red as of now. But remember, you have US holidays that's happening. Normally, US people, especially institutional corporates, they leave vacation after the Thanksgiving and then come back after 1 month. That's what happens, right? Normally, so the volumes will be less, from the institutional side, buying, selling, and all will not happen too much after the Thanksgiving, right? So that could cause problems with our market. Also, the market will move sideways. Consolidation may continue for some more time. US index as of now it's at a resistance zone. So there is also a possibility that volumes are going down and it can go down to the trend line channel, which it had earlier blocked out from. So US indices have actually taken out broken out from the trend line channel and also conquered a nearby resistance, but it's right now consolidating and going to maintain that. All the other indices, Dow and S&P also is at resistance. It's still not at the channel top. Major events: US job status coming Wednesday. FOMC minutes for the next Fed interest rate minutes, meeting minutes are coming on Thursday. Thanksgiving holidays are there from Friday. So all these would impact the market. You'll have to be cautious and careful and check that in the pre-market before getting into putting your money into the trades. So stock picks: Bank of Baroda and Whirlpool. Whirlpool is short and Bank of Baroda is a long. Let's quickly see the Bank of Baroda stock. Index is doing good. There's more strength. Clearly, this consolidation. There is a flag pattern also there, and moment is bullish. It has got a divergence also, and weekly also it is looking good. It has blocked out from a trend line channel. There is a long round cup pattern is there, multi-year. So there is every possibility that it can move. There is a flag pattern and there is a triangle consolidation. So bullishness all over. And Whirlpool is not doing good. During this pullback, we could get opportunities to trades. Remember, we had and then showed a pattern which did not work out. It managed to climb up again. There's a chance that it can fall to this trend line. So short swing trades could come in with tight stop loss in play. You could get swing trade opportunities on the short side. Reason is it has got momentum in the medium term also for the bear zones, trend cross over the bear zones and rising bearishness is seen. So several reasons why this is a short call, right? To stock picks. So that's to summarize our studies on different parameters that we did for the technical analysis. Let's come to a conclusion. What is our market view for tomorrow? My view for tomorrow is mild bearishness. Reasons. Today what happened is actually it's a pullback, right? And there is a beginning of a consolidation that is shown in the Bollinger Bands also. So earlier, remember that previous week we had a confirmation of the crucial resistance on breakout that occurred both this. And Banknifty also made a new all-time high, so that's all good thing. But the thing is whether it's going to sustain. Are we going to have enough volumes in the coming next 1 month? To make another breakout. This may not be the right time for a breakout, right? Because the major parts of the Fyers are not that much. It may be difficult. So consolidation is evident, is going to come, but is it going to last long? Is the consolidation eventually would it take us back to the bear zones? If so, are we going to make another swing low, or is it a small pullback? We don't know, right? So overall for tomorrow is all that we can look in this analysis. So CIP possibilities are changing polarity possibility we thought. Moving average support is there, so bounce of it can happen. Mix has cooled off substantially. And these are all factors still in favor of the bulls. You should not forget that. But overall, momentum has slipped in the bear zones. Crossover the trend also has happened in the Nifty. So although the Banknifty is still bullish, but eventually it may follow the Nifty. So that's possibilities there. So market view still mild bearish. That's all. It's on the very short term. US market as a resistance. We talked about US market. If absence may come in next week after the Thanksgiving. We talked about that resistance. Dow Jones, everything is at resistance. Rupee is still at low levels. Dollar is still shooting up. The only good thing is crude oil is dipping and the VIX is cooling off. But VIX can anytime spike up within a couple of days and reach the 20. So whenever the VIX spikes above the 20, stay out of trade. Otherwise, it's good time to trade the options when the VIX is low. 18,100 is the level that I see supported immediately, and after that 18,000, then 79.50 kind of levels. If that's freeze, then we have trouble. It may be extended down more, extended crack that may happen. Similarly, upside 18,500, if that is conquered clearly, then all-time high is very easy. 42,000 and 42,500 is where the bank levels are seen as of now. So always hedge your positions if you're passing on overnight positions, so that you have your capital protected, right? You manage your risk, cut short your position size if there is big size is spiking up, and manage your risk, and then you're in the game, protect your capital, you're in the game. Otherwise you not have anything to trade on. So that's my view for tomorrow. My bearishness is there. That's what the charts are saying. That's what the momentum and the trend indicators are saying to me. I may be wrong, but I'm going with this view based on the study that I have done. You may have an alternate view of your own using the same analysis as well. In your own, you can interpret it in your own way, right? So if this analysis has helped you in some way or the other, right, in understanding the market better, then don't forget to subscribe. We have very few subscriptions and appreciate your help in this regard. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.